Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Yantai North Andre Juice Co.Ltd. Annual Report. Yantai North Andre Juice Co.Ltd. is a leading manufacturer and exporter of fruit and vegetable juices in China. The company offers a diverse range of products that cater to various consumer needs. The company's product portfolio includes fruit and vegetable juices, such as apple, pear, peach, orange, lemon, and strawberry juices. In addition to these, they also provide pulp, essence, and pumice-related products. Furthermore, the company produces clear sweet potato and clear haw juice concentrates, which are in high demand. The company's export business is a significant aspect of its operations, with its products being shipped out of China to various countries around the world. With over 2 decades of experience in the industry, Yantai North Andre Juice Co.Ltd. has established itself as a reliable and trustworthy supplier of fruit and vegetable juices. Yantai North Andre Juice Co.Ltd. maintains a market capitalization of $13 billion, broadly in line with the industry peer group. Yantai North Andre Juice Co.Ltd. trades at a lower price-to-earnings ratio of 14 times and a lower price-to-book ratio of 1.67 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The balance sheet appears very conservative, with liabilities representing only 5% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Net income experienced a significant increase from RMB 160,015 in 2021 to RMB 330,345 in 2025, marking a 106.7% growth. However, this trend was disrupted by a 28% decrease from 2024 to 2025. Despite the fluctuations, net income still showed an overall increase of 18.44% year-over-year. Profit margins also underwent changes during this period. Net profit margin rose from 18.4% in 2021 to 19.7% in 2025, while operating profit margin increased from 18.4% in 2021 to 19.6% in 2025. Conversely, gross profit margin decreased slightly from 24.79% to 24.26%. The increase in net income despite a decrease in gross profit margin can be attributed to various factors. The main reasons for the changes in net income and profit margins include an increase in sales volume of juice concentrate, a decrease in payment of commission to customers, and the reversal of credit impairment loss. Additionally, changes in government grants, accounting policies, and impairment losses also contributed to these fluctuations. The company is indeed generating positive operating cash flow, a crucial indicator of its financial health. The data from various sections of the report consistently shows a significant increase in net cash flows from operating activities, ranging from RMB 491 million to $484 million. This upward trend is further reinforced by the positive status of operating cash flow, as stated on multiple occasions throughout the document. Furthermore, the net increase in cash and cash equivalents of over $172 million serves as additional evidence of the company's ability to generate positive operating cash flow. Overall, these figures demonstrate a strong financial position for the company, indicating its capacity to meet its obligations and invest in future growth initiatives. The company's debt level has experienced mixed results over the past few years. While there was an increase of $114 million in one instance, other summaries suggest no significant change. This inconsistency may indicate fluctuations in the company's financial obligations. Regarding interest expenses, the picture is more clear-cut. Despite some initial reports suggesting no change or a 10% decrease, subsequent summaries reveal a significant increase. Specifically, interest expenses rose from RMB 76 million to RMB 82.75 million, indicating a notable increase in the company's interest payments. The company's financial performance can be analyzed through its operating and investing activities. In terms of operating activities, the segments that performed well include the sale of goods and services, which saw a significant increase of 28.5%. Additionally, refunds from taxes and surcharges also experienced a notable rise of 137.4%. On the other hand, the company's investing activities were not as favorable, with proceeds from disposal of investments declining by 29.9%. This indicates that while the company excelled in generating revenue through its core operations, it struggled to dispose of its investments effectively. Management is focused on implementing a strategic approach that balances risk and return. To achieve this balance, the company aims to diversify its investments and businesses, reducing exposure to single industries, regions, or counterparties through effective risk management policies. In terms of liquidity, management has emphasized the importance of maintaining adequate cash reserves and marketable securities. This includes regularly monitoring short-term and long-term liquidity requirements, ensuring compliance with borrowing agreements, and negotiating with suppliers for debt reduction or disposing of overdue accounts receivable to ease cash flow pressure. The company's strategy also involves investing in research and development to support future growth, capitalizing on projects that meet certain conditions. Overall, management is committed to creating a stable financial foundation while driving business expansion through strategic investments and risk management practices. The company has made significant acquisitions in the past few years. In 2023, Aksu Hengtong Fruit Juice Co.Ltd. was acquired, marking a strategic move for the company's growth and expansion. Building on this momentum, Fuxian Hengsing Juice Company Limited was acquired in 2024, further solidifying the company's position in the market. On the other hand, the company has not made any notable divestitures recently. Despite some domestic juice concentrate enterprises being expected to exit from market competition, no specific details are provided on these exits. It appears that the company is focusing on acquisitions rather than divesting existing assets at this time. The company's financial strategy has been focused on rewarding its shareholders through dividend payments. As per the provided information, a cash dividend distribution approach was adopted, resulting in an aggregate cash dividend of RM 100,256,400 being distributed to all shareholders. This indicates that the company has indeed paid dividends to its investors. However, there is no clear indication that the company has bought back shares as part of its financial strategy. The information provided does not mention any share buyback initiatives or programs. Therefore, it can be concluded that while the company has prioritized dividend payments, it has not engaged in share repurchases. That concludes the financial summary for Yantai North Andre Juice Co.Ltd. Feel free to comment below, and I will be happy to answer them when possible.